Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, December 7th, 2022. Starting with our economic release spotlight. So we got some trade data out of China. It was pretty ratty. The exports slowed 840 basis points to minus 8.7% year over year. These are November numbers. That minus 8.7% is the lowest print we've seen since February of 2020. Obviously, signaling some concerns about global growth. But in my opinion, I think it has more to do with the fact that you're seeing disruptions in production all across China, whether it be Guangzhou, Shanghai, etc. So that's been an issue as well in terms of protests and whatnot, zero COVID, which may not get better, by the way. This thing called COVID is a seasonal virus. And then you had imports, which continue to show Chinese demand for pretty much anything but commodities is really punk, minus 990 basis points to minus 10.6. We've contracted minus 10.6% on a year-over-year basis. That's the lowest print we've seen since May of 2020. So Chinese demand is punked for pretty much everything but commodities, but you continue to see China stockpile crude oil. So Chinese imports of crude oil increased by 3.6 million barrels per day to 46.7 million barrels. That's the highest level we've seen in 1 month since January of this year. And that 3.6 million barrels acceleration is the fastest rate of change we've seen since March of this year. So they're really stockpiling. And you see Chinese crude oil imports increasing 63.3% on a 3-month annualized basis, stockpiling ahead of what is likely to be a continued relaxation of COVID curves. We talked about in lead off morning note, kind of the scenario analysis associated with the near term relaxation versus a more gradual one. So go check that out if you want to get the details on how we think about that. And with that, just shifting gears to macro risk management. Got our Longbow dashboard here, starting with global macro. Dollar's been bearish from a short and medium term perspective on the Longbow momentum signal. It's kind of in the middle of the range there. Dollar is gold, has been bullish from a short and medium term price momentum basis, also in the middle of the range. 10-year looking much like the dollar, bearish, middle of the range. S&P 500, that's neutral short term, bullish from a medium term momentum basis, getting towards the lower boundary of the range there. What's the lower boundary of the range of S&P? 3,900. Now starting to slope down though, so be careful there if you're buying the dip here in risk assets. VIX, bearish on both the short-term and medium-term duration. It's getting towards the upper boundary of the range of the Longbow trading range there at 22.95. We talked about what that signal in the context of some other signals that from our probable range process of 42 macro in our leadoff morning note, and ultimately what that implies for the broader market regime on a kind of a short to medium term basis. And so it might not be what you think. So definitely go check out that note if you want the real details. Just getting back into this. NASDAQ, Russell, both neutral from a short and medium term price momentum basis, both towards the low boundary of the range. Is very much looking like the S&P 500. Bitcoin still bearish on both the short term and medium term basis, in the middle of its range. And where's the Bitcoin range right now in Longbow? It's about 17.7 versus 16.2. So be aware of that, kind of in a tight, narrow range there after a lot of volatility we saw early last month. Ethereum, neutral from a short-term perspective, but bearish from a medium-term perspective. We're smack dab in the middle of the range. What's the range on Ethereum? 1381 to 1139. That makes a lot of sense in the context of that Bitcoin signal. And then lastly, China and crude oil. Talked about that. China's been bullish from both the short and medium-term price momentum basis, and that's certainly helping its range slope upward, particularly the upper boundary of the trading range there. That's at 32.84 in terms of the Shanghai Composite. So Chinese markets love the idea of coming out of zero COVID. We talked about this pull forward in demand, and particularly as it relates to commodities and what that may ultimately mean for broader risk assets. It's our view that China's going to have an unconstrained growth dynamic that's very positive for growth, and also an unconstrained inflation dynamic in terms of exporting inflation abroad in terms of its incremental demand for commodities. Or the reopening is going to be quite gradual and China's not going to have a material step forward. Commodities are the linchpin here. If you think about China, the more Chinese demand is positive, the more inflation we're going to get out of that reopening process. The less Chinese demand is positive in terms of gradual and very tepid reopening, the less inflation we're going to get out of this process. So it might wind up being a wash. I haven't heard too many people say that yet. So you heard it here first, folks, as you hear a lot of things as it relates to macro risk management. And then lastly, short-term and medium-term bearish price momentum for crude oil that is oversold per the probable range there. So, this is for those of you who think Chinese reopening is not adequately priced in energy markets at the current juncture, this would be a spot to be buying crude oil with both hands. And then lastly, our free day of the Alpha tab where we saw 300 ETFs, all representing individual factor exposures across global macro. Most overbought to most oversold. Nothing particularly overbought this morning. Let's find some exciting oversold signals here. Energy, same thing with energy as it relates to China coming out of zero COVID. So if you're betting on zero COVID as the bull case for broader risk assets here, you got to be getting long crude oil and energy at these prices per the Longbow dashboard. So with that, Darius Dale presenting our macro minute for Wednesday, December 7th, 2022. Super pumped to have our friend Jim Carson joining us for Macro Bundle Live Q&A today. He's had a great year, both in terms of thought leadership, but also in terms of actual performance. So we're going to be unpacking some of the components of his process, in terms of, kind of thinking about how we can improve our own respective processes as we set up for what should be another challenging year from a risk management perspective. So looking very much forward to that. That's at 11 o'clock today. Subscribe or upgrade to Macro Bundle to participate at 42macro.com. Catch you back here tomorrow. Cheers.